This is Strictly Business, presented by the Greater Bakersfield Chamber of Commerce. Sponsored in part by the law offices of Young Wooldridge, San Joaquin Community Hospital. And now, here's your host, Cindy Pollard, President and CEO of the Greater Bakersfield Chamber of Commerce.
Welcome back. Joining me now is Patrick Birchfield, a senior tax accountant for Brown Armstrong Accountancy Corporation. He's been drinking a little bit of the juice as well. But right now, he's here to share some tax tips for small businesses. Welcome.
Thanks for having me, Cindy.
Oh, so glad you're here. So this is the end of the year, or should I say the end of the year is fast approaching. And it's a good time for businesses to start taking a look, or they should have started already, but if they haven't, now's a good time to start taking a look at some end of the year tax planning. What should small businesses be looking to do between now and, say, December 31st?
I would say right now is probably the most important time of the year just because after January it's too late and you can't do any planning. So it's actually more important than the filing season. Right now, you want to see where you land with your income and expenses to see if you're on budget or target where you thought you were going to be.
Okay.
And then it's really important to take action right now. So if you have a lot of income that you want to reduce, we recommend for a lot of our clients to do things like buy assets, buy equipment to increase the expenses and lower your income.
Okay. This is the time of the year I know we get a lot of businesses at the Chamber of Commerce that are looking to prepay some of their 2015 expenses and sponsorships, and that's a good way to offset some of that income from the previous year or the current year.
Exactly. You'd want to accelerate expenses and maybe delay some income to 2015. That's another strategy. Another thing we might recommend is pre-tax contributions to some plans. If you're a self-employed business, you can put away money before taxes, and it's a great way to cut down taxes and increase your wealth.
Okay, sounds good. So what are some of the biggest tax mistakes that small business owners make?
Well, I think a big one is not having someone qualified like a CPA do your taxes.
Okay.
We really provide a lot of value. A lot of times it's a lot more than what we charge. People also don't meet with CPAs regularly. People forget to pay their quarterly taxes.
Oh.
So it's good to be in constant communication with your CPA, at least quarterly, to pay your taxes and throughout the year. Okay.
And when somebody actually makes a misstep, what are we looking at in terms of the cost to the business?
It can be costly if your books aren't in line. If you're miscategorizing expenses, if you're reporting things incorrectly, it can be very costly. So a good thing to catch or fix those types of mistakes is to work closely with a tax preparer or a CPA.
Okay. So what are some of the deductions that small business owners most often overlook?
One of the things that I see, sometimes a small business owner will pay things personally, and it doesn't make its way onto the books until we catch it or we ask them about it. So that's a mistake. It's nice to have a very separate set of books than your personal.
Okay.
So that you can avoid those types of mistakes. You never want to commingle the two.
Okay.
So that's a big one. And then sometimes they miss marketing expenses, advertising expenses, promotional expenses. I see people miss auto expenses a lot. So those are some common ones.
In terms of mileage or maintenance and upkeep?
They're maybe unaware of the mileage rates from the IRS, or maybe they're paying the maintenance personally, but really it should be a business deduction.
Okay. So how much of a home office or a personal vehicle is deductible through a business?
Okay, you can deduct a portion of your home office. The calculation is a square footage calculation. So you take the square footage of the area in your house that's used exclusively and regularly for your business. Once you get that square footage calculation, you can multiply it by indirect and direct expenses.
Okay.
And the indirects can be your rent, your mortgage, property taxes, insurance,
utilities. Okay.
Those you can also deduct a portion of those expenses.
Okay. Significant savings, I would imagine.
Yeah, it can really add up. It can really help. For a long time, people were figured that it was an audit flag, and so they were a little hesitant to take that deduction. But if you are really using a part of your house for your business, there's no problem at all in taking that deduction.
Okay. Where do people get into murky waters? Is it if they don't have a dedicated office, or if their expenses vary widely on a year-to-year basis? Is that
Yeah, for the home office, it would be if you're mixing entertainment in that area,
okay.
or it's used for something else besides business. But then also, I guess you're asking about someone's books too. If you're not aligning your expenses correctly, or you have big sways in income or expenses from year to year, those can trigger your IRS audits. So it's nice to have a CPA to review, someone that has the experience and the knowledge to really review your tax return, make sure it's correct, and it's not going to trigger any IRS audits.
Okay.
Then the other good thing is that if you have a CPA, they can represent you in front of the IRS.
Right.
And they
Should you
can
get a call, huh?
Exactly, they can walk you through the whole ordeal.
Right. Now, just a minute ago, you mentioned entertainment expenses. What's typically deductible and what's not?
That's a great question. So meals and entertainment are typically 50% deductible because the IRS figures that you're getting some enjoyment out of it.
Okay.
I guess years ago they were 100%, but they squashed that.
Okay.
So if you're, taking clients out for lunch, or you have a business meeting where you're going out to lunch or for dinner, you want to track down the people who are there and the nature of the meeting.
Okay.
And so those are typically 50% deductible.
Okay. So just keep track of all of those receipts, write on them who you're entertaining and
what was talked about.
Right. Sporting events, theater events, those types of tickets are also
Yes, 50% deductible.
50%. Okay. Great. So what type of information do business owners need to keep, and for how long? I know that there are all sorts of requirements, but particularly for the tax and accounting.
I would keep them as long as you can. Now with technology and cloud-based servers, you can keep large amounts of information for a long time. So I would never really want to get rid of them. And the types of things I would keep track of are like the receipts for the meals and entertainment, who was present, what was talked about. Another good one is an auto log for a car deduction.
Oh.
It's nice to, because if you get called in the case of an audit, you may have to explain the business nature of those auto expenses.
Okay.
And so you want to keep a log of, where you went, who you were with. And then the obvious ones would be bank statements and credit card statements.
Okay.
You want to keep those for as long as you can.
So just scan those in and just hold on to them. Is it typically 7 years or 9 years or something like that?
Typically 6 years.
6 years? Okay.
But I couldn't think of a good reason to get rid of them. I'd keep them as long as I can.
Now, if you're likely to get audited, how far back would
Normally
they go?
it's 3 years.
3 years,
from the
okay.
filing.
Okay. So what are some of the special requirements for business deductions compared to personal deductions?
You really just have to look at the nature of the expense. Is it for my business? Is it not a hobby? We have a lot of people that will have hobbies that they try to pass off as businesses that never generate income, and that's just low-hanging fruit for the IRS. You never want to file a return that had a lot of hobby or personal expenses on it and try to pass them off as business expenses. So the main thing is, do they generate income? Will they generate income?
Okay.
Have they ever generated income? Those are the type of expenses you can deduct. You really have to look at the nature of every expense.
Okay.
And that's something that we help out with.
Okay, so if I happen to be into fly fishing, I can't write off the trips unless I'm serving as a guide maybe and generating some income from it?
Generating some kind of income, or you may generate some income in the near future, or historically you generate income.
Okay.
Then you could pass it off as a fishing guide.
Okay. But I could also be potentially raising a red flag.
Big time. Especially for something like that.
Okay. So as we look towards moving to a close, what one piece of advice would you give to business owners right now in terms of what they should do, absolutely, if they don't do anything else?
I would say that they need to see where they stand for their books. Don't wait till December to close your books.
Okay.
Do it as of October or as of November.
Okay.
See what you can do before the end of the year. How much cash do you have? Can you donate cash into a self-employed plan?
Okay.
An IRA plan.
IRA plan. Okay.
See if you can do that. Is there any kind of equipment that you can buy to lower your income? Is it equipment for your business or an auto? The other main thing is, have you paid enough tax in? If you don't pay enough, you may be subject to interest and penalties on tax that's owed.
Okay.
Do you have cash to pay for taxes before the end of the year? Do you need to pay yourself a bonus and withhold on that bonus before the end of the year?
Okay. Okay.
And also, the work that you do now is just going to make the filing time easier.
Good point.
So the work you do now is less work in February, March, and April.
Okay. For the April 15th dreaded date.
Mm-hmm.
Okay. So if they don't have an accountant, they should certainly be looking for one right now. And
I think now's the best time to find an accountant because of all the planning that you
Okay.
can take advantage of.
okay.
And the money you pay them, you could greatly exceed in tax savings.
Terrific. Patrick Birchfield, Senior Tax Accountant with Brown Armstrong Accountancy Corporation. Thank you so much for being here today.
Thanks, Cindy.
Okay. I'm Cindy Pollard with the Greater Bakersfield Chamber of Commerce. You're watching Strictly Business. We're going to take a quick break for a word from our sponsors. And when we come back, Kira Wiggins from San Joaquin Community Hospital will be joining us to talk about flu preparedness, flu season, which is upon us, and flu shots. Stay tuned. We'll be right back.